What's going on, Z community? It's me, Tamer Aziz, and today we're going to be discussing if it's best to start investing in your RRSP or your TFSA first. We'll be talking about situations when it's best to begin investing in your TFSA and situations when it's not. And the same will be applied to the RRSP. The number one reason that you should start using a TFSA first is tax-free gains. Now, usually the money that you put into your TFSA has already been taxed. Because of this, any profits that you make, you do not have to pay taxes on. If you had this in a non-registered account, for example, you would be obligated to pay taxes when it comes to filing. With the TFSA, you could literally make $10 trillion and the CRA will not ask you to pay taxes on it. Another reason that you should use a TFSA is if you are within a low tax bracket. I'll give you an example of what I mean by this. So you file your taxes every single year and a percentage is taken right to the government. This percentage is based on the tax bracket that you are within. If you make between $0 and around $49,000, this means you would have to pay 15% of your taxes to the government of Canada. That's not all. You would also have to pay an extra percentage to the government of your province or territory. If you're watching this in Ontario, you would have to pay an extra 5.05% to the government of Ontario. This is why I recommend starting off with the TFSA if you find yourself in this situation. If you find yourself in this situation, it is not worth opening an RRSP first because you will not take full advantage of it. I hope that you've noted this down because we're going to be talking about this whole tax bracket thing more in detail when we talk about RRSPs. Another reason that you should use your TFSA is if you know what you're doing and you have a strategy that you've tested out multiple times. Whatever your strategy or investment vehicle is, if you're confident with your decisions and you know that it's going to multiply your money, I would recommend going all in with the TFSA and maxing out your limit to take full advantage of the TFSA and its benefits. Now, if you don't know what you're doing, the only type of account that I would suggest you opening is a demo account so that you can actually get comfortable with the investing world and know exactly what you're doing before putting in real money. Now, there are two big reasons that you should not use a TFSA first, and this is number one, if you are a beginner investor. As I mentioned before, you should only be using a practice account and you do not want to end up in a situation where you lose contribution room and you lose your money. I made this mistake when I first started out with penny stocks. I lost a huge amount of money, got all emotional, and withdrew everything. Because of this, I had to wait until the next year in order to even start putting money back in again, and it made me lose time. If you don't know what I mean by contribution rooms, check out the video that I made about TFSAs, which explains everything that you need to know. Another reason that you should not use a TFSA first is if you're going to use it for savings accounts or investments that give you low rates of return. Examples of these types of investments are GICs, high interest savings accounts, some bonds, and some mutual funds. Canada's average inflation rate is about 2.2% every year, and using these type of investments, you will hardly break even. This means instead of your money gaining value, you are actually going to be losing value, and you do not want to do that. Now, don't get me wrong, I'm a huge advocate for the high interest savings accounts, but I think the only thing that you should be putting in here are your emergency funds, your fast cash funds, so on and so forth. Money that you will need within a year. Even then, I put these into non-registered accounts, meaning whatever interest that I get, I will have to pay taxes for, which I am completely fine with. Now, you should use an RRSP if you are within a higher tax bracket. Now, I hope you still have your notes with you when I was talking about tax brackets before, because we're about to dive in a little bit deeper. So if you are anywhere higher than the first tax bracket, I would definitely suggest you starting off with the RRSP. The reason I say this is that the RRSP was made to reduce the taxes that Canadians have to pay. This reduction happens if you make contributions to your RRSP. For example, if you made $50,000 last year, but you contributed $2,000 into your RRSP, you would only have to pay taxes on $48,000. This means that you would not have to pay taxes on the $2,000. There are a couple of things to keep in mind if you are going to do this, and I would recommend checking out the RRSP video that I made that explains everything that you need to know. Now, another reason that you should use your RRSP is if you've already maxed out your TFSA contribution room. First things first, if you did this, big congratulations. This is a huge milestone and you need to celebrate it. Now, because you can't put money into your TFSA until next year, you might as well use the second best tax advantaged account, which is the RRSP. This is because if you put your money into a regular account, which is also known as a personal account, a non-registered account, and so forth, you will have to pay taxes on anything that you end up making in profits. This percentage will depend on how you get your profits, whether that be in dividend income or capital gains from buying and selling for profit. Their goal here is to make as much money as possible and reduce the money that you are to lose. By doing this, your second best option is the RRSP. The last reason that you should use an RRSP is if you plan to buy a house or pay for your education within the next couple of years. I say this because there are two very special plans that you can use when you have the RRSP. These are also known as the HBP and the LLP. The HBP is also known as the home buyer's plan, and if you are a first-time home buyer, you could basically take money from your RRSP tax-free to put as a down payment. The LLP, on the other hand, is also known as the lifelong learning plan and is the same as the home buyer's plan, but instead of a down payment on a house, it's just to pay off for your tuition fees. Think of these two special plans as a personal loan. You're basically loaning money from yourself, and you'll see this why when I make a specific video explaining everything that you need to know about an HBP and the LLP. Now, there are a couple of reasons why you should not use the RRSP, and it's basically if you fit any of the criteria as to why you should use the TFSA first. Otherwise, I don't think there are any specific disadvantages to the RRSP, or at least from what I've experienced. That's pretty much it, Z community. Let me know what you guys think in the comment section down below. Don't forget to like this video, subscribe to the channel, and share this video with any loved ones that you want to see at the top. Thank you guys for watching. This is me, Tamer Aziz, signing out. Peace out, Z community.